plans turned into reality. Confidence is up.
Welcome to EION membawa Anda ke tinjauan mingguan emas Babalkan.
Hey guys, I'm Jane from EION Management and my role is to share with you your weekly dose of EION Weekly Gold review. The price of gold fell about 4% last week from 1,886 to around 1,811. Gold's volatility last week was mainly affected by inflation data. A surge in the US dollar index and the Fed Chairman Jerome Powell is the confirm for a second term. Investors mainly focus on inflation data, producer price index, and consumer confidence index. With the impact of the increased interest rate, the market has already given the answer in the performing of US dollar index. You may find the US dollar has soared, this certainly putting some pressure on the gold price. Gold prices fell and then rose on last Wednesday following the release of inflation data. After the US inflation data was released, the data showed that 8.3% was higher than forecast. But in terms of overall data, this is the first time since last year September that it has fallen, which seems to be reflect that inflation has marked the peak and the Fed's interest rate high played a certain role. However, there is still a certain distance from the Fed's 2% inflation target, and the supply chains problem in the United States have not been alleviated, which poses certain challenges to the Fed. To combat inflation, the Fed will need to make 3 more rate hikes of 0.5%, but there will be no largest move. The dollar has risen nearly 9% this year to a 20-year high, as investors turn the US dollar as a safe haven. Markets concerned about the Fed's ability to lower inflation without causing a recession, and also worry that the war in the Ukraine and the coronavirus outbreak in the Asia. Jerome Powell has confirmed Thursday to a second term as chair of the Federal Reserve, a powerful post from which he will lead the central bank's targeting campaign to bring down inflation. Investors bet that the Federal Reserve will insist on aggressive interest rate hikes, and then flock to buy the dollar, helping the dollar refresh a nearly 20-year high of 104.93, which once suppressed the price of gold, hitting a new low of about 3 months to around the 1,810. The producer price index PPI rose 0.5% in April. This marked a slowdown from the 1.6% gain in March from the previous month. Indicates the price growth peak in March. Even so, the Fed is expected to raise interest rate by at least 0.5% on at least 3 occasions in the coming months to cool down inflation. US Treasury Secretary Janet Yellen said she believed the Fed can reduce inflation without causing a recession because the US labor market and households' balance sheets are strong, the cost of debt is low, and the banking sector is strong. Finland's plan to apply for NATO membership, announced on Thursday, and the expectation that Sweden will follow, would bring about the expansions of the Western military alliance that Russian President Vladimir Putin aimed to prevent. Moscow would take retaliatory steps, including a military tactical response. The conflict, which Russian President Vladimir Putin has duped a special military operation, has put pressure on global energy and food supply and fuel inflation. So in conclusion, the price of gold will still be suppressed in the short term. The US market is strong. The market seems to have already digested that the Fed will raise interest rate by 0.5% in June. The dollar index continued to soar, but the inflation data show that it has slowed down. It is expected that the US dollar index may mark the peak and will fall back. If the US dollar index falls, the gold price will be strongly supported. This week, investors will be looking at US retail sales, housing start, building permits, and existing home sales. Of course, the dialogue between Fed's officials and the situation in Russia and Ukraine also need constant attention. Well, that's it from me. Thank you for watching. My name is Jane, and I shall see you again soon. So stay home, stay safe, and buy more gold. Think of gold, think of EION. Goodbye.